Morning, everybody. It's the 10th of February. We are Signal Centre, Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, Joe. All right.
Yeah, good. How are you this morning?
Not too bad, thank you.
Good.
Jolly
Okay,
good.
get stuck in, shall we? There are a growing number of European central bank policymakers that are losing faith in the institution's current inflation forecasting, emboldening their shift towards hiking interest rates later this year, according to officials with knowledge of the matter. We've got one of the chief economists, Philip Lane, robustly defending the ECB's projection and insists his staff's modelling is reliable and state of the art. Several governors, however, are cautioning against depending too much on them in a quickly changing and uncertain environment. So, more to come from that. I mean, we're going to get some big inflation numbers from the US today. So, obviously, this remains an issue that is front and centre when it comes to the what's happening with the markets in general. What else is going on in the UK? We've got Boris under more pressure. There was pictures leaked yesterday of some Christmas parties. I don't know if you saw those, Steve.
Yeah, I was there, mate.
You were there, I know. You shouldn't have said that. Now you're
I,
going to get fined.
I was there in spirit.
Oh, okay. There was lots of spirits in there by the looks of things.
Definitely was a lot of spirit in there. A lot of bubbles.
Yeah. Yeah, they weren't mucking about with the bubbles either. The picture I saw had a big old with the was it Cliquet Verve or whatever, the
Verve League.
champagne. Verve Clique, yeah, sorry. Obviously
You
not down with
obviously,
my champagne.
yeah, exactly, Joe.
Can't afford it, can I?
No.
Yeah, but the people that, I pay the taxes to can afford it, so that's all right. Apparently, the UK police are going to contact more than 50 people over the gatherings and potentially due to the potentially damaging new photo that emerged. Apparently, and this is according to Dominic Cummings' Twitter account, there are far worse pictures than that knocking around. So we will see more leaks, no doubt, in the coming days and weeks. The UK is putting more troops on standby to bolster a humanitarian response in the event of a conflict in Eastern Europe. Also, the European Union will snub a request by the Russian foreign minister for its member countries to respond individually to Moscow's demands on a regional security framework. Instead, the EU foreign policy chief will respond on behalf of the bloc. That's according to a draft of a letter seen by Bloomberg. Bit of corporate news. Disney CEO is finally out of the shadows of his predecessor. Disney reported first quarter sales earnings and streaming subscriber growth that handily beat analyst forecasts. So the shares are up as much as 10% in extended trading yesterday. Another solid day for stocks overall. US bond yields provided a break for hard-hit growth stocks, but the Dow and the S&P 500 also had a pretty good day. We do have the latest reading of the US CPI number today, so that's what everybody will be paying attention to later on. Steve, what's going on the charts? Anything that's interesting you this morning?
Just scanning through, having a quick look. Obviously, the indices continued higher yesterday, and let's take a look at the Ftse to start with. I always like to start with the Ftse. Price action really sort of pushing up to these previous swing highs back from January 2020. This is the levels we got to, or we were at, just before the pandemic hit, 7,680 in the Ftse. Bit of a concern. 100% retracement. Obviously, we had a pretty decent sell-off. So total of 37.82% sell-off before everything bounced back, and it's all back to, what were we all worried about, I wonder. Obviously the interest rate issue going to hit hard. I really just don't understand the mentality that the sort of central bankers think that by raising the interest rates, it's going to sort of affect the spending. It's because people aren't going out and being frivolous, spending money on champagne and then popping corks and everything. It actually
the government is.
Well, the government is. It's more to do with the energy, the food prices going up. People, can't stop being cold and can't stop being hungry. So raising interest rates is just going to cause huge dire consequences later down the road. Anyway, 3 positive days of price action on the DAX. We've hit this resistance at the Ichimoku cloud. Still potentially there could be a little more upside. Looking at the shorter term chart, we have hit this downward trending resistance line. We drew this in yesterday, connecting these 2 points. It's hit a third point and it's reacted quite aggressively lower from there. On the hourly chart, we can see we're forming a bearish outside candle on this hourly chart. That closes in 8 minutes. So potential for a small retracement back, 15,462 should offer some support. Break below there could open up the downside a little bit, but remaining positive overall on the DAX after the last 3 days of positive price action. Dow has continued higher also. Again, looking at the daily chart, we are close to the resistance levels of the cloud, but we've broken up above the last week's high and having a little bit of a pullback, same as the European session opening up with a little bit of a step backwards. NASDAQ pushing higher again. We talked about this yesterday. This was my gun to head trade, pushing up towards this right shoulder and the 50% Fibonacci retracement level. Really key to maybe retest this. 15,278 is the previous swing high before we got this pullback. Normally when you get a correction, it's in 3 waves, A, B, C, and so there's still, I think, potential for further upside. The dips just continue to get bought, and I can't see anything changing, especially with the interest rate background as well. The S&Ps has clawed its way up to the swing high from last week, 4,595. Again, small short-term pullback now, looking to kick on from there. Looking at the commodities, oil has really sort of like trodden water yesterday. A little bit of a bullish hammer formed on this candle. No real price action going on at the moment. Bit sideways, bit indecisive, but we do have overall this move higher has slowed down. MACD has crossed over, so still a little bit more potential maybe for a retracement. 87.50 is the support level in WTI crude oil at the moment. In Brent crude oil, we've got 89.25, 89.30. Dip by there. If we get a break of there, potentially it opens up a retest of support at 87.50. However, the $100 barrel of oil still seems the favored route with the Russia-Ukraine issues continuing. I did see a video of Putin yesterday just outlining the fact that if Ukraine do join NATO and then try to recapture Crimea, then that drags NATO into a full-on conflict with Russia. So obviously, lots of things we want to avoid in that scenario. Cryptocurrencies, Bitcoin has slowed down a little bit. You were short of this yesterday, from what I remember, Joe. Doesn't seem to have sort of moved too much away from where you were looking at getting short. But you might have done okay. Well, I don't know. We'll see in the gun to head. But yes, still at crucial levels for in my eyes. This 45,500 is the resistance level. A break above there, I think we should head back towards the 51.5 to 52,000. If we remain below here, this is just a retest of the neckline and sayonara baby for the Bitcoin. That's about it, Joe. I like the little logos that TradingView have got now.
Oh, I didn't notice
that.
that.
Cool. Yeah, that looks pretty cool, doesn't it?
Why haven't I got it on my one? Maybe I didn't like
yeah,
Are you using the app?
You got the free version, haven't you? No.
You want the web or the app?
I'm not sure actually. I think yeah, it's just a web.
Huh.
Yeah. So yeah.
Wow. Okay. Right. So here's my charts without the lovely logos.
Logos.
So dollar index, nothing to report really yesterday, still within the bullish channel. We didn't really do an awful lot, closed pretty much where we opened, a bit of indecision, and we're still hugging the lower end of this channel at the minute. So that could all change come 1:30 this afternoon when we have the latest read on inflation, but nothing really to gain from that chart as it stands. Similar situation with euro, US dollar. Bit of indecision yesterday, closed mildly higher, but still looking as though the downtrend will persist, and we've got this resistance at 114.82, which continues to cap the upside. We have continued to see a decent appetite for risk, particularly in some of the Aussie currencies. Aussie yen, having broken out of this corrective channel, is still moving higher. This is 4 consecutive days of upward movement if we consider that today hasn't obviously closed yet. So 3 on a closing basis and potential for 4 if it can hang on to those gains today. Aussie versus the US dollar has rallied into a fib level that we have here at 71.92. Again, 4 consecutive days of gains as things stand. Overall, still looking for lower prices with this because the dominant trend still remains lower. So we've got a bit of consolidation ongoing at the minute. The potential also for a double bottom to form. One bottom here around about the 6th of December, another one here around about the 28th of January. We would need to take out this level here at 73.14 to confirm that pattern. So that may be something worth keeping a bit of an eye on. If that can emerge, then maybe we'll see a decent corrective move to the upside in the Aussie versus the US dollar, which would mean that we're probably going to see a break to the downside of this channel on the dollar index if that is to play out. Looking at cable, again, not a lot going on here. Really quite choppy, in fact. Yesterday, we posted highs up to around 135.90, but gave all of that back to actually close lower on the day, down at 135.34. So a bit indecisive on that for now. Euro sterling continues to be a little choppy, having failed at this 61.8% fib at 84.79. Still looking for lower prices there in line with the dominant downtrend on that. Let's have a look at dollar yen, see what that's doing. So that's back up at the highs or close to the highs. Bit of indecision yesterday, posted a doji, but got some resistance here around 115.52. If that can break up from here, then we may see a continuation of this very nice looking uptrend that it continues to trade in. That's pretty much that, I think. So gun to the head trades from yesterday, as we sort of briefly touched upon. I was offside on Bitcoin by 0.6R on the session, so didn't do an awful lot. But Steve, you had a nice one on NASDAQ, making almost 1.5R on that yesterday. So well done to you.
Gracias.
What do we fancy today? US inflation. Anything going to get moving on the back of that?
Well, I suppose interest rates, the Bund might, the US 10-year might get whacked a little bit. I'm going to focus more on the commodity side of things. We've got this double bottom taking place here on crude oil. If we look at the 4-hour chart, we've got a little bit of indecision really. It's pulled back into this area and poked its head back above. Gold on the 4-hour chart is formed a bearish outside candle, which covers the last 3 hours. I know that's overnight price action, but that might open up a little bit of downside, although you're saying dollar could weaken, so this won't work if dollar weakens. But I can't help but sort of go for it. Getting short at 18.32. My stop is at 18.37, so nice tight stop. And looking for a pullback, only just around about a 2-to-1 risk reward really on here, pulling back into support. Support really comes in the shape of 1815 to 1823 area, so I'm looking at 1822 to take profit there. So yeah, selling gold just based on the last 4-hour candle and the sort of like negative couple of candles we've seen in the last 2 hours, which has come from that. So short here, stop at 1837, targeting 1822.
Cool. Okay, I'm going to take a look at New Zealand dollar versus the Japanese yen. I've got a level over here that I'm looking to sell, which, as you can see, has got a massive risk reward ratio on it, 11.6 if it gets up to that kind of zone. But looking at the intraday candles, or particularly the hourly chart, what I'm attracted to is this bearish outside day or bearish outside candle that's formed on the 60-minute chart. So we've attempted to make a new high, but engulfed all of the previous hour's worth of price action. And obviously, as you can see, we've had a pretty decent rally in recent days, but overall the trend remains pretty negative. So that could be an indication that a short-term top is in place and we can see a bit of a reversal. So I'm going to attempt to sell that now at 77.30. Really tight stop of 77.50. And going to target a decent move lower to these two levels here, where we've maybe got a bit of support at 75.98. So looking for 6.4R on that one today.
Boom, nice one, mate.
So yeah, highly speculative, of course, as all these trades are. But yeah, if you don't try, you don't know, I suppose.
Yeah, very
and
true.
I'm avoiding the inflation data as well with that as well, by not linking it to anything dollar related.
Yeah, nice one.
Okay, so as we've just talked about, it is inflation day today, 1:30 UK time. We've got the latest read on the US CPI number. Prices are expected to rise 7.2% year on year and 0.4% month on month, with core CPI rising to 5.9 and 0.5 month on month respectively. We also have initial jobless claims out at the same time. Claims expected to fall to 230,000 from 238,000 a week previous. So a couple of bits of data to keep an eye on, but I think inflation is going to be the headline that everybody will be watching. Any thoughts on that, Steve?
Well, I just see Armin made a comment in our Slack channel saying 6.4R, no way, Joe. But I think Armin was the one struggling to switch his computer on this morning, wasn't he?
Yeah.
So I'll go with Joe instead of Armin on that one.
Thanks, mate. How'd you like that, Armin?
Yeah, just reboot, mate. It's simple, isn't it? It's like, what if your computer's not working, just reboot it.
Yeah, turn it off, turn it on.
I think he was a little bit concerned maybe the whole World Wide Web had gone down because he couldn't log on. So thanks for the heads up, Armin. But, all good here.
Lovely. Okay, that'll do from us then. We will be back tomorrow morning. Until then, everybody have a great day.
Cheers.
Bye.